What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the weeks ahead. These stocks include names like Tesla, Meta, Amazon, Apple, and NVDA. So there are large cap tech stocks that hold a lot of weight in the market. And the reason why we go over SPY before we go into these stocks is because SPY gives us a general idea of what the overall market is doing. Now, during our breakdowns and analyses, we're going to give you the support and resistance points that you need for these stocks. That way you know exactly where to place your stop losses and where to take your price targets and the strategies that we plan to take on these stocks. So let's go ahead and get started by first talking about SPY, and we're going to do so on the overall daily candles, and we're going to look back for more than a year to see where the overall market is headed right now. So as we can see, for the last year or so, SPY has been trading just below a specific trend line that it managed to break in 2023. This trend line is this white line right here, in which we've gotten rejected once, twice, 3 times, and 4 times at, up until 2023, which we broke back above it, and now we are trading above it once again after retesting it. So this is a good sign for the bulls, the fact that we are trading above this trend line, and if we do fall back below it, then we are likely going to see some panic selling, and we're likely going to sell off and make our next leg down. However, for now, it looks like we are holding this trend line, which means we are in a green zone. But this is the overall picture, and it's going to take some time for us to determine whether we're going to go up or down from here. So now we're going to switch over to a shorter term time frame so we can see what's happening on the micro charts, and we can make shorter term projections. So we're going to go to the hourly candles, where we can see that last week, most of the movement started happening after Wednesday. Now, what happened on Wednesday? We saw the Federal Reserve raise rates by 25 basis points. So anytime the Federal Reserve speaks, especially Jerome Powell, we see the market act with a lot of volatility. Now, the fact that they raised rates by 25 basis points was kind of expected, because that is just their ongoing battle for inflation. Jerome Powell did say that he is willing to stop rate hikes in order to support the banking system. However, on that same hour that he was speaking, our Treasury Secretary, Janet Yellen, was speaking, and she said that she was not looking to guarantee all depositors money. So now the market is even more confused, which is why we saw so much uncertainty in the days that followed. Now, looking ahead for the weeks ahead, we have some levels to go off of. Our first and primary resistance to focus on is going to be 402.50. Below 402.50, we do have a slight resistance at 399.30. However, 402.50 is going to be the primary resistance because we got rejected so strongly at it after the Federal Reserve's meeting. So if SPY can break above 402.50, then we can definitely see a liftoff, and we can move towards 405 to 408. However, if the market cannot contain and keep the bullish trend, then we are likely going to fall and retest the lows of Friday, which were right around 389.30. If we fall below that level, then these are the next supports that we have in place. The most critical support we have is going to be 380.50. If we fall below 380.50, then we are likely going to see panic selling, because this was the lowest point that we came to before we saw a strong upside push. So if we fall below that level, then we are likely going to be going towards 370 to 375. Now, what can make us potentially go up or down this week or in the weeks ahead? We have some reports to focus on. We first have the PCE report, which is actually the Federal Reserve's preferred gauge for inflation. So that's coming on Friday, March 30th. If that PCE report shows that inflation had an uptick, then it is likely going to see or result in a very strong downside move on the market. Next, we have the US GDP report, which is the fourth quarter reading, and it's going to be the final reading for the fourth quarter. Now, the last two estimates, they did fall a little bit short of the consensus, but they were still positive, even during the recession period that we're going through. So with all the economic fears, we're still seeing positive GDP. But now we have the banking turmoil to add to the mix, and so the GDP may actually come short in line, but as long as it is positive, it is a good sign for our economy. And last but not least, we have the consumer sentiment reading, which is also coming on Friday. We can imagine that the consumer sentiment reading is not going to be so well, considering there's so much uncertainty in the market right now, and a lot of people are running for the doors or they're scared for their money. Now, VIX happened to drop by the end of last week. So during times of uncertainty or right before a very large announcement, we see the VIX usually rise. However, after the announcement, we saw VIX drop sharply, which means that volatility has actually come down. So this is a good sign for us option traders, because when you're looking at volatility and volatility has dropped, the implied volatility of an option means it also dropped. So when we're looking at stocks like Apple or stocks like Amazon, the implied volatility is trading between 20 to 40%, which is a very attractive percent for us to get into options at in terms of the buying side. So knowing what we know now about volatility and about SPY and the general direction of the market and what we can expect for the week ahead, let's switch over to the watch list and see how we're going to approach individual stocks. We're going to first start off with NVIDIA, which has been a favorite in the market so far. We can see that NVIDIA for the last 4 months or so has been rallying non-stop, and it has reached a high of around 275 before pulling back slightly by the end of last week. But it is very much still bullish, and it is trading with extremely strong relative strength. So there is still a chance for NVIDIA to push higher, and we're going to talk about some levels to focus on. But before we move on to the micro picture, let's talk about the macro picture. Now, NVIDIA, the last 2 times it's come down to the 10 and 20-day moving averages, buyers were quick to get in and they bought it right back above those levels. These are the purple and the blue line here. We are expecting NVIDIA at some point to fall below these lines and fall to its 50-day moving average. Anytime a stock is rallying and it drifts a little too far away from its 50-day moving average, eventually all those buyers will realize that it needs to correct itself back down, and they will sell off their positions and bring it back to the 50-day moving average, which at that point it may see more buyers and it will go back up. So we are expecting NVIDIA in the coming weeks or months to come down to its 50-day moving average at least, because we do believe that NVIDIA is extremely overvalued right now. However, apart from the fundamental valuations, let's talk about its technicals on the short term. Let's go to NVIDIA, and we're going to talk about it here on the 5-minute candles. Let's zoom in a little bit. And we're going to talk about the first resistance. So the first resistance to focus on is going to be 275.90. The way we got that resistance is simply because that was the highest point it reached last week before it got rejected. So NVIDIA got rejected at 275.90, which means it will need to break above that level in order for it to move to its next price target. Now you can see our next price target is very moderate. We're not looking for a very large upside move. And the reason why is because NVIDIA has already made such large upside moves that any large upside move right now is going to be very risky to hold too long. So our first price target on NVIDIA is only 282.50. But it doesn't mean that NVIDIA is only bullish above 275.90. NVIDIA is actually bullish anywhere above 263.35. So if you are bullish on this stock and you want a position, then you can get into the stock and set a stop loss just below this level, and you can ride it up to 275 to 275.90 and take profits. If it breaks above 275.90, then you can take profits right around 280 to 283. What we like to do is we like to take profits on half our position at the first price target, and then take profits on the second half right around the second price target. By the time the stock has moved up from here to here, we've already moved our stop loss from this point to this point. That way we can secure our profits no matter what happens. Now, if NVIDIA fails and it breaks below 263.35, it can fall to its next support of 253 to 254. We're not going to take a short or a put position on the stock unless it breaks below 245. If it breaks below 245, then we are looking for a put position down to 233 to 235. That would be our first price target, and our second price target would be right around 223 to 225. Now moving on to the next stock, which is Apple. Also been a very strong stock on the market. Despite the market turmoil and despite the uncertainty, Apple has managed to push up, and we can see that last week it managed to break out of this range that it has been trading out for quite some time. So it's very obvious that Apple has been trading between 145 to a high of 156 for about 2 to 3 weeks, and then finally last week we saw that breakout and it continued to push higher. Now the highest point that Apple reached last week was right around 162.15, so let's talk about our first price target or first resistance to focus on, which is right around 162.10. So if you are looking at Apple and you want to know where to trade it from, Apple is trading bullishly right above 157.50. So if you are bullish, you can take a position above that level and place a stop loss just below it, or even just below its next support right around 154. So if the stock breaks below 157.50, you can choose to execute a stop loss, or you can execute a stop loss below 154. If the stock does move back up, your first price target is going to be right around 162 to 162.15. If it breaks 162.15, then your next price target is going to be right around 164 to 165. Now, if the stock breaks below 154, we're not going to short it or play any put positions. We are looking to short the stock if it breaks below 150 to a price target of around 143 to 144. If it breaks below 143.50, then our next price target is going to be right around 140 to the downside. The next stock on our watch list is going to be Amazon. Now, Amazon has not been as strong as Apple and NVDA recently, and that's because they are having some trouble on the e-commerce side. Amazon didn't report the best earnings on their last quarter, therefore there wasn't a lot of attention on them in this quarter. So looking at Amazon, we are looking to finally see a breakout above or below this consolidation period that they've had for the last week. Looking at them on the shorter term time frame, here are the levels that we're focused on. If you are bullish on Amazon, you're going to need a breakout above 102.10 for it to move to a price target of around 104. If it breaks above 104, that means it can move to a price target of around 106. If you are bearish on Amazon, then you're going to need a break below 95 for it to move to a price target of around 92 to 92.50. If it breaks below 192.30 support, then it can move to a price target of around 90. Now, Amazon has been quiet for some time, so if it does finally get that upside or downside move, then it is likely going to go in that direction for quite some time. The volume that it's recently seen suggests that it is going to go up. We can see that buying volume has been excessively stronger than the downside volume or the consolidation volume. So we are expecting Amazon to go up, but that also depends on the overall market conditions and the overall market movement. The next stock on our watch list is Meta, which, like Apple and NVIDIA, has been exceptionally strong. Meta has been feeding off the fact that TikTok is likely going to get banned in the United States, but many people are doubting that that will happen. Now, Meta may go up, however, it will be very dependent on the TikTok news, so make sure if you are trading this stock, you pay attention to that news very closely. Here are the levels that we're focused on for Meta. If Meta manages to break above last week's highs, which were right around 208, then we are looking for a push towards 216 as a price target. If it breaks above 216, then its next price target is around 220. So Meta does not have a lot of resistance points between 208 and 216. In fact, it hasn't seen these levels in a very long time. So if it does break above that level and you start to see weakness before it reaches 216, because that is a very aggressive price target, make sure you start to capture profits even if it doesn't reach that 216 level in time. Your stop loss above 208 will be just below 208. So if it breaks back below 208 after breaking back above it, that means the breakout failed and you need to get out of that setup. Now, if Meta breaks below 198, then it is likely going to fall to a bearish territory and it will sell off to around 193.60, which would be our first price target to the downside. Below 193.60, it can fall to around 189 to 190. Now, last but not least, the moment we've all been waiting for, Tesla. Tesla stock has been quiet for the last 4 days or so. We see we got a very nice gap up on the 21st. However, it has been just moving sideways since. Tesla's volume does not suggest that it will go up or down. Right now, people are very uncertain and we're trying to figure out which way it's going to go. However, we do have some levels for you to focus on to figure out where it's going to go next. If you are bullish on Tesla, you're going to need a breakout above 201. Now, we got to remember that anytime a stock reaches a very firm number like 200 or 100 or 300, that is automatically a psychological resistance or support. So we can see that when Tesla attempted that breakout above 200, it failed because that was a psychological resistance and it moved back down. So now Tesla needs to break above 201 for it to potentially get that move up, and it will move to a price target of anywhere between 210 to 213. If Tesla fails and it breaks below 185, then bears are likely going to step it up. If you see selling volume below 185 start to pick up, then you're looking to get into a short position or a put position right below 176. If it fails below 176, then you can put your put position down to a price target of 162 to 163. If it fails below 162.70, then the next price target is going to be around 153 to 155. I hope you guys found this video helpful. Thank you so much for checking in. Don't forget to subscribe and like. Thank you so much.